Well, welcome to the Global Marketplace Forum, the most ambitious one today for the grand finale. I see a few of you are still around here, but the ones who aren't here will miss something very special because we're going to look at the outlook on China and its role in 2011, and I would add, and beyond, because I think beyond may even be more interesting. Who better to navigate us through these shows but Eric Leng, Managing Director of UBS. I'm David Andelman. I'm the editor of World Policy Journal. I brought two of the magazines here. They're wonderful magazines. You should, of course, subscribe. That's why I'm here. No, I'm actually here because I'm fascinated by China and have been for many years, and in fact invested in China. A substantial part of some of you who were here earlier know that nearly 100% of my retirement account is invested in emerging markets, and about a third of that in China. And I've done very well. I'm very happy with that through the years. So let's start off, Eric. I know our little rundown sheet had it in the reverse, but I like to start out with the broad picture, and then we'll narrow in on specifically on investments. The broadest view, the macro, if you will. Where is China's economy today? How is it weathering the recession? Is it been largely immune to global shifts? Is it still being buffeted by them? Where do we stand right now?
China obviously is not going to be immune to the global economy, but the country as a whole over the last 3 decades, GDP has grown about 90-fold. That's 90. That's a phenomenon only very, very few countries has achieved, and all the other countries that has grown double digits for 30 years, eventually they hit a wall. So China is at the transition period where they have indeed grown a lot, but at this point, which way they're going to go going forward is certainly a challenge, especially China now is in they call it transition period. The current administration will go out in 2 years and the new ones will be ushered in. So the issue is what kind of economic policy or social policy or politics going to be going forward, which will ensure the China economy keep on growing. But suffice to say that of all the places you're going to look at, China is fast growing and it's very large markets and quite contrary to many people's perception that China actually the politics are very reasonably stable. I mean, I think the Mao period maybe you have some volatilities, but ever since Deng Xiaoping put in the new system in China, Chinese politics has been very stable.
The politics have been, but I'm interested particularly in like the industrial areas. We have a piece that I'm actually for our next issue that I've been editing just this afternoon from Beijing from a young Chinese writer. And she talks about the instabilities in between the countries and the cities, and especially a lot of the instabilities in the factories that have kind of infected the people coming from the cities. How concerned are you about unrest like that actually percolating into the future and perhaps leading to instability?
Well, like any emerging economy, I mean, there will be uneven development. I mean, if you look at the Chinese wealth gap, it's actually much wider than U.S. at this point. But if you look at other emerging economy, Brazil, Mexico, they all have a similar phenomena. So it's not just to China. But on the hand, though, that's certainly the issue that confronts the leaders of the Chinese at this point, because sooner or later, the uneven of the wealth distribution could lead to certain unrest in the country. But the thing is in any kind of society, problem or not, if the country keep on growing, which means everybody's living standard keep on improving, the chance of riots is actually still small, despite the fact that some of them, China now has the second largest group of the rich people on the Forbes magazine, but still, overall, everybody's living standard is improving. So from that point of view, certainly they are sitting on some factors that can lead to unstable environment. But overall, you have to recognize the growing environment where most people, the living standard are improving.
Mm-hmm. Well, that's very encouraging. There's also quite a bit of concern about the direction of the currency, the yuan, and where it's going. We were talking just before we came in about the band. That's you said a narrow band. The United States would like to see it perhaps widen out a little bit. They say it's widening. Where are we going to head? How much pressure can the United States and foreign countries bring on China? How much can it resist a change in the value of the yuan?
The rebalance of the global economy certainly is on every country's leader's mind. I think whether currency can solve that problem or not, I think is a different issue. I think RMB certainly has improved. Has appreciated 20-some% in the last 3 years, and I think U.S. probably like to see it appreciate another 20% in another 1 year or two. But will the currency appreciation drastically change the imbalance that we have now? It's a question mark because Chinese the way they import and export, how much that related with the currency is a question mark because the consumption largely is still satisfied by domestic production. It's not like they're started buying the luxury goods now. But what I'm saying is the currency appreciation for another 20%, will that solve the employment issues which we are having? I think it's still a question mark.
In our panel this afternoon, we had four investors, each of which pushing for their own regions of the world. We had a Latin American investor, a specialist pushing for Brazil and Latin America. We had an Indian specialist and so on. So make the case right now for China as an investment compared to other emerging markets around the world. Why is China so compelling today?
Well, obviously, for the reasons I already mentioned, one is the growth, the second is the depth of the market, and the third is politically actually it's reasonably stable. That aside, the valuation in China is not demanding. If you look at it, it's forward P somewhere around 15 to 17 times. It's not really demanding given the compared to the other markets. So if you look at now around the globe, Chinese domestic Asia plus Hong Kong share add up probably the second largest equity markets. For any global investor, it's very difficult for them to to forget about it. So from that point of view, certainly it would be there. Secondly, the Chinese market is actually follow some different rules than you would otherwise. The inefficiencies, the coexistence of the SOEs, basically the state's enterprise versus the private owners, what do we call startups? Of the way the economy is a little different. So to understand China is right now probably is much better than let's say 5-10 years later, where the efficiency is all gone, then the chance of making money will disappear.
So what you're suggesting is that there are some small companies that would be very interesting for investors, but there are also some very large companies. There are also, on the third part, there are some very large foreign companies that have come in and have become major players in the Chinese market itself. If you were going to balance a portfolio, where would you be leaning right now? Where do you get the best bang for your buck right now?
Small cap has been, or small mid cap has been a bright spot in Chinese stock markets, at least in the Asia point of view. I think the small cap index now is probably going back to historical high now, despite the fact that the overall index is only half or less than half of what it was at the peak. So historically, people are thinking that the small cap is where to be because the private owners usually run the companies more efficient than the SOEs, and they probably care more. But I think going forward, this situation may change. Apart from the banks, some of the state-owned companies are quite interesting. For one, they usually in a monopoly or duopoly type of situation. For two, they usually control resources and they have certain entry barrier that's very difficult for others to get in, being its license or being its relationship with the local government or being its funding, cheap funding. So going forward, this small cap phenomenon may not be as prevalent as what it was in the last few years. So to me, I think it is probably time to study a little bit more about those SOEs or larger companies now.
But are they smaller, to continue on the small and mid caps right now, are they as transparent as you would like to see? Can you trust their numbers when you go to invest in them?
Well, my motto is, going to we can't even trust a company in this country. It's very difficult to trust anything.
There is that.
In China, I think due diligence as any investment, you really have to do it on your own. On surface, if you look at any financial statement or reporting, it's very transparent, very clear. But always that was in detail. So for Chinese small companies, I think it's going to be a while before you can just look at the statement and trust it. I think if you ask any Chinese analyst, what they're going to say to you is that the number one priority for their job is to know the chairman of the board very well.
If you were investing, therefore, would you say we had a discussion before we came on here? I should say that between the H shares and the mainland Chinese shares, which right now it was much more difficult, of course, for foreigners to invest in. But as this begins to open up, would you say that there is more confidence in shares purchased through the Hong Kong market or through the Shanghai Shenzhen markets?
I mean, well, this. I assume we all know there's, China basically has probably three different markets. You have the A share, which is open to the domestic investors. You have the B share, which is very liquid and a very small market. That's for the people who have dollars. And then you have the H share, which is a company listed in Hong Kong. So because the Hong Kong exchange has its own regulation and the listing requirements, so in general, people trust the companies in H share a little bit more. And also Chinese governments in China, investing is always about face factor. So the companies that listed in Hong Kong are usually the companies that they already gone through a few rounds of reorganization or cleanups. So by and large, they are companies and can be trusted more. But regardless whether A share or H shares in general, I mean the shareholder value in China is actually quite. Every company actually talk about it. I mean I think in my experience dealing with them, they actually talk about shareholder value much more than we are here. And in quite a few recent M&A cases, actually the Chinese domestic security regulators, CSRC, actually voted in favor of shareholders. So despite the fact that Asia obviously has a lot of issues there, I think still moving to the right direction where it's going to be, you can trust more and more.
Well, let's talk about some specific sectors. Are there any sectors of the Chinese market that you really like better than others that are more poised for growth and development?
I mean, you probably have to go back to look at the Chinese economy. I mean, one of the, despite the fact that China has grown so much, actually the parties that benefit the most is still the government or the corporate, because if you look at the GDPs, 5 years ago, the consumption is probably somewhere around 46%. Now it's only about 35%. So most of the wealth accumulated by these hard-working workers are transferred to the government. The government receipts is about 26-27% of the GDP. So that phenomena is difficult to go on. I mean, as we discussed earlier, it has social unrest. It may not lead to an unbalanced economy. So one of the key themes I think going forward will be how to invest, follow the theme is the increase of the domestic consumption. At this point, it's still early because it's a little different from what we know here. I mean, Americans or Westerners in general like services. I mean, Chinese like goods. So there's a distinctions here and there. Right now, if you would play, something, or at least part of it that theme related with consumption can be quite important theme, such as travel, hotels, and luxury goods. I mean, I'm pretty sure most of us here have already observed some of the themes now.
It's interesting. We had a piece a few years ago when I was at Forbes about the Chinese consumer. And they're most interested, they prefer, if they possibly can, to buy their products, even if it's a virtually identical product, in a Walmart, for instance, rather than in the Chinese store, simply because they feel like somehow that American cachet gives it something extra, an extra value or extra assurance of quality. How long is that going to continue, or is it still a prevailing practice?
It's probably still a prevailing practice. I mean, if you go to Beijing, one of the most famous streets is called Xiusui Street. I mean, in there you'll find scores of foreigners buying cheap knockoffs. I mean, they are very happy to buy a Ralph Lauren for like, I don't know, $1 or $2. But if you go to, Woodbury Common, which is, the premium outlet, you'll find busloads of Chinese going there to buy the discount, real, authentic goods. So that phenomenon will not change. I think for a while it's going to persist like that. That's what's, it is a troublesome thing is that in China, because the fast economy, because the growth is so, everybody can see it. So the way to make money in China still is very short term. I mean, people want to see results in 3-6 months. And the fastest way to get that is we call the reverse engineering, or in Chinese term it's called 山寨. What it is to legally or illegally somehow to that's now in the Chinese market either H share or A share.
I was having a dinner last week